Hello, hello, Mavericks. This is Rob Reinhold. It is nice to see you here, October 13th, 2022. And wow, what a day. Now, before today, we had said that the market was likely to be at the low of last week, right before the CPI report. And we nailed that. We got it right on the head. And we said we think there's one more push down after this low. And I got to say, the push down was literally measured in seconds. So let's talk about what happened today, because we had the CPI report came out much hotter than expected. As you can see here, much hotter than expected. The futures dropped immediately, and we saw at one point NASDAQ down 3%, S&P down 2.5%. It was ugly at the open. But once that open came, there was maybe about another 5, 10, 15 minutes of not sure what to do. And then the market ripped higher, and it just ripped higher all day long. And so the market had a 5% rally off the bottom. To close up, as you can see, the Dow closed up almost 3%. The S&P closed up 2.5%, NASDAQ 2.2%. Oops, forgot to update the IWM, but that was up about 2.5%. Just a huge rally off the bottom. The advanced decline line was 7 stocks up for every 2.5 down. Just a huge rally off the bottom. Now, I want to talk about this because we have been talking about the high levels of the VIX. So let me quickly go over to the VIX. The VIX got up into this 32, 34 area. Every single low that we've seen over the last 6 months has had a VIX that spiked to this area. We got a capitulation bottom move today. Now look at this candle. A gap down, panic, very negative news, and by the end of the day, we closed positive. That is a huge bullish engulfing candle. Now look, this is where we have to take a look at technicals. I love bear markets. I love trading in bear markets, and I've just had the greatest time in September and October. I've been enjoying it quite a bit. At some point, that's going to end. And a lot of times these things end with a capitulation bottom, kind of like what we saw today. As much as I love a bear market and I would love to stay bearish, I cannot ignore that this day happened. This day is a very significant day. Now, let's not get too far ahead. This is one day. I need to see tomorrow's candle. So when we do our trading room over the weekend, we will have Friday's candle. And if Friday's candle can hold in or even go up a little bit on Friday, I think we have to take a look and say, okay, that is the end of that leg down. Now look, there could be another leg down later that takes us to lower lows, but at this point, we have to take a look at this as a possible capitulation low. Now, if the market gives back half or more of this gain today, so let's say that we open up and we sell off and we lose 2% tomorrow, you know what? It's not clear. It is definitely not clear that that was a capitulation low. And I think we still have to be very wary of the market having a real hard time going up. So we'll see. We'll see what happens. The VIX did come down, but it came down to 30. It's still highly elevated. When we take a look at the heat map, if we did this in the morning, it would have been the exact opposite. By the end of the day, it had closed green. Microsoft, Apple were the big winners in big tech. The chips had a huge rally. If you want to take a look at a big move today, take a look at the SOXL. That's the 3 times semiconductor ETF. It gapped down 12% and then ran to positive 10% in one day. That's just a huge range for a sector to take. So let's take a look at these markets here. We were at a -2 and a -2, very bearish. Sorry, we are actually at a -3 on the monthly outlook, where you need to bump that up a little bit to a -2. So again, just paring back our bearishness a bit, but by no means are we going bullish. We had a -2 on the week, and we sure enough got that move down. We said whatever happens on Thursday in the CPI is going to be very meaningful. So we're going to go to basically just a 0 for the week. So at this point, the market is actually up a little bit for the week. It's just up, I think, just under 1% for the week. We could easily just have a normal day tomorrow, give back, a little bit, and we bid a 0 for the week. As I said, I am not making any determination until we get that candle tomorrow. That candle tomorrow will tell me everything. So look, I don't want to waste your time with a bunch of trades because look, I'm going into tomorrow. I'm waiting. I'm waiting for tomorrow's candle to close. I'm very happy to just go into the weekend and then do all my research over the weekend and show up on Monday with a big long laundry list of things I either want to go long or go short or go sideways. So I'm going to show you some trades and some possible setups, but just know that I'm in no rush at all to be making any of these. First one I want to talk about here is Caterpillar. I've been keeping my eye on this one because remember, the markets just made a new low this morning. And we hit that low over the last 2 days. Will you take a look at the candles that Caterpillar's been putting in? We are substantially off our low that we set in September. And while the market tanked over the past 2 weeks, we've had almost only green candles. It's showing you that this one doesn't want to go down with the rest of the market. It's bucking the trend. When the market does recover, these are the kind of stocks that typically outperform. As you can see, bullish engulfing. We close up at the high of the range. Look, we're right there at moving averages. I am not saying we are going to be super bullish Caterpillar. I'm looking at doing like a 180, 185 diagonal call spread. That is a very wimpy bullish trade, but I think those are the kind of trades we need to make here off the bottom. Another trade that looks like it is poised to rip out here is LNG, Cheniere Energy. This is a natural gas producer, biggest exporter in the world. And you can see we base between 150 and 175, and now we're breaking out. That base was about 2 months long. Everything looks really strong on this LNG. If you're looking for some longs, I think the energy and LNG sector look great. On the sideways, this is Johnson Controls. Again, looking for sideways, I want to find things that haven't gone down to make new lows. Because the things that made new lows, they're the ones that are the weakest. Look, and if we get a big market bounce, those are the ones that are likely going to have the biggest bounces. I want to find something that's just been boring, that no one's been crazy about, that hasn't been plunging. So here we have this Johnson Controls. We made a nice little low down at 49, and here we are up at 52. If I'm looking to be more bullish the markets, if we get a bullish candle on Friday, then look, I'm looking to make this as more of a bullish sideways play, either up to the 54 or the 55 area. That would be where I'd put the middle of my butterfly, a targeted butterfly at probably 55. And boy, on the short side, I do not like anything short here. We have had a big move lower. We are reaching the end of our seasonally weak period, the 6 weeks starting September 1st. I am just not loving new short positions here. If you have existing short positions and the market gives up gains tomorrow, you know what? Go ahead and let those work. I just do not like new short positions here. There's going to be a ton of stuff that has had big bounces higher. You want to look for the stuff that didn't really rip higher. And this here is Annaly, N-O-Y. This is a mortgage broker in the RIAT sector. Look at today's candle. Up 0.24%. That is not all that impressive of a rally. We could get all the way up to 18, possibly, on a bounce. But I do like this one setting up for a short sometime in the future. Let's talk about tomorrow. As I said, tomorrow is make it or break for me. I do believe that we did get a capitulation bottom today. Tomorrow will confirm that. If it was a capitulation bottom, meaning that the news got so negative that everyone had already sold, and when we finally got that last bit of selling, there was no one left to sell. And then buyers come in. Now look, these capitulation bottoms aren't one-day deals. They last for weeks. We saw one in July. This could easily be another one. We're going to know tomorrow. If there is buying tomorrow, or if the market just holds in, let's say the market is flat tomorrow. That's a huge deal after having a 5% intraday move and there's no sell-off. That's going to tell me going into Monday that I need to be at least not bearish anymore and maybe neutral to slightly bullish over the next couple weeks. If we give gains up tomorrow, that was a one-day thing. And I think you can go back to being fairly safe on the short side and the market likely goes lower. We will see where we are over the weekend. Tomorrow morning, retail sales. I don't expect that to be all that exciting. The CPI was the big news this week. And we do officially start third quarter earnings. All the banks in United Healthcare are out tomorrow morning, so expect there to be some movement off of these bank earnings. If these bank earnings come out better than expected, remember, we bottomed out in July right when second quarter earnings started. I would not be surprised at all if we get some earnings reports that are good tomorrow and it pushes the market a little bit higher, really solidifying that capitulation bottom. If these earnings come out terrible, this could be the thing that killed this little one-day rally. As you can tell, I am in wait-and-see mode, and I will update you tomorrow in the trading room. Other than that, everyone have a great weekend. We'll see you later. Bye.